Fastest day on Dalal Street, but India was not alone. Global markets are also in a tailspin. Joining us now is Christopher Palmer, the founder and chief investment officer of Benson Avenue Capital. Mr. Palmer, hi, good evening. Good to have you on the show. What's happening in global market right now? Is this a big global bear market? And do you get a sense that it's going to get much worse from here before it gets better?
Well, technically, we've been in a bear market for a couple of months in some of the key markets. And I think what continues to weigh on global equity markets really is a combination of nervousness about China, with the Chinese market unable to stabilize itself. And I think that's, as you can see in today's Tata Motor numbers, for example, there is real weakness feeding through in China, and that's really reflected in many listed companies. And the second issue is this mountain of debt, which is related to energy and mining companies, which are really spread all around the world, and that's affecting these large banks, as you can see in European trading this morning, and the performance of some of the U.S. banks. And no doubt that will carry on until we get more information from these energy and mining companies about where their balance sheets can stabilize.
Christopher, until yesterday, whenever my co-anchor pointed to the parallels with 2008, I used to resist that analogy. But today the headlines are sounding familiar. SocGen down 11%. Did we not refer to SocGen when Lehman fell? Are we getting to as bad as 2008, and will we now start talking the words depression also coming into the picture? How much more of a fall do you think risk assets can suffer?
Well, I don't think this is 2008. Some of us have been, go back to an earlier bear market in emerging markets, which was 98, 99, and really had much more to do then with the dividend, the peace dividend from the end of the Soviet Union, and the glut of oil which came onto the market, in the late 1990s. Now, our research has pinpointed really $25 a barrel as the kind of level where some of the petro economies, Russia, Middle Eastern economies, and others, they really find themselves in quite a lot of trouble with regards to their budgets. So that was the catalyst back in 1998, 1999, when Russia had a very severe crisis, and that spread to other oil economies. And that's probably the analog that investors should look at. That did lead to quite a lot of weakness in global banking shares as well. If we move along to today, the amount of money that's invested in energy projects and mining projects globally has only gotten bigger, largely because of the rise of China. So the bill for those projects which aren't so smart now because of the lower prices, the bill is just going to be that much bigger. And I think that's what's weighing on the banks particularly. We have seen some blow-ups already in the U.S., which is a bit more transparent with regards to these kind of companies which have overinvested in energy projects. But I think that's what's weighing on investors' minds, is that there is a time bomb out there, but it is somewhat smaller than it, but certainly something that is going to mean significant hits for these banks which hold this debt and investors which hold this debt going forward.
All right, we'll have to leave it at that. Out of time on the show. Christopher Palmer, thank you very much for joining us with your analysis. Well, the word from both the Indian expert and the global expert is that the pain is not ended. There is more to come with fear from the European bond market, mining stocks, and of course the fear of China with another 3% cut today from those markets. So clearly, fear stocks developing into horror, and this is not the end of the horror show.
Oh, yes, clearly this isn't. But then, you have to be hopeful and hope that tomorrow is another day.
We'll wrap up this edition of Markets, the Fear Factor on that note. Thanks for watching.